Hello, it's your dividend friend. How are you doing today? I just want to come and say thank you so much for coming to my channel. And as promised, I do have the family that I was telling you about that their goal is to pay off their mortgage in 8 years or less. But you already know me, I'm just a voice. I say, hey, you guys make the choice. After looking at their financial situation, they decided that a first position HELOC was the best for them. Remember, with the first position HELOC, it's simply you eliminate your total and complete mortgage using your home equity line of credit to pay it off. In this case, they did that. Give you a little bit of background. This family here bought a new home, and the good thing is that the home was actually appraised at $600,000. Now get it, their mortgage is only $30,000. So what they did was went to the bank pulled the comps, put all the appraisals and said, yeah, you are worth over $600,000. So what the bank did was they gave them 90% loan to value, which is going to give them $540,000 in a line of credit. So with a line of credit, it's a no-brainer. They're going to pay off their mortgage, which is $530,000. Now with them, I want you to look at something. Oh, wait, before I even go there, please subscribe to my channel. Please like the page, but I'm going to ask you to do something better. Subscribe it and share it. You know, it's something about YouTube when you put that subscription saying, look, I believe in this program. I think they're doing a great job here. It's going to push it out to the masses. And my whole goal here is to make sure that not just me and my friends or my four are becoming debt-free, our mortgages are being paid off in record time. I want to help so many people, but I can't do that unless you're sharing the channel, but you have to subscribe. Then you share and you encourage your friends, because you guys are all in this together. Nobody wants a 30-year mortgage. Nobody wants to struggle making a mortgage payment. This is going to eliminate and take the stress out. So could you please go ahead and subscribe? I'm going to wait for just a little bit. Okay, thank you for those that did. Moving right along. Okay, so we've already talked about it. They are going to run down this mortgage in record time. I always say, don't worry about the interest rate. It doesn't matter when you're doing velocity banking, for the simple fact is that you're beating the banks in the interest game. You're going to pay them a little bit of interest, but it's the cost of doing business, because remember, we did take out their money. We're going to pay them a little bit back, but not a whole lot back. So look at the board here, you guys. This couple here, they have a nice strong income of $12,272 a month. They have expenses, $34.18, but they have a positive cash flow of $88.54. Now, I want you to look at their expenses up here. We were talking and we said, you know, with you guys having to take out that home equity line of credit as your first position, $540,000, you know, how do we want to do this? They decided that they wanted to keep their expenses separate. Now, their expenses are things like their savings accounts, their groceries, their streaming services, their electric, their gas, their car insurance, and also their savings. That's really important to them. But they also realize that, guess what? This home is paid off, but you're still going to owe property taxes every year. So you have to pay homeowners insurance policy. That's why you're seeing that $34.18. That is all of their expenses. So they decided, instead of using all of that in the HELOC, they're going to keep that separate, but they're going to focus on the $88.54 cash flow. That's where their focus is going to be. I'm going to show you 6 months of them making payments. And if they do this strategy for 8 years, you guys, maybe even less than that, they're done. There's no more need to make a payment at all. They're finished. So can you imagine when they're in retirement looking back and saying, this house has not only is paid off now, it's been paid off. We took out a 30-year mortgage, but guess what? We're now sitting and we're done with this thing in 8 years. Remember, banks count on you leaving your house within 5 to 7 years and getting a brand new house, therefore starting a whole cycle all over again. Well, you can get a new house if you want to, but wouldn't it be nice to own a nice piece of real estate? This house is worth $600,000. I'll bet you within the next 8 years, it's probably going to hit $1 million. So could you imagine them going and saying, hey, we're done with this house. We enjoyed this house. We're going to go ahead and just sell the house. They're going to walk away with $1 million cash money. They may buy another house, maybe a $500,000. I don't know. But just knowing that they have the option to build wealth through real estate is a wonderful thing. They didn't go out and buy a duplex. They didn't go out and buy another property. They use their home and they leverage their home to become, you know, their leveraging tool. So let's look at this chart here. Okay, we know they were given $540,000. They decided to use the $530,000. They went to their mortgage company and said, hey, we're going to eliminate our debt today. They paid off that debt, used their line of credit. But now they have to target all of their energy to that line of credit. Let's watch as they do it for 6 months. Okay, first payment, they're going to inject that cash flow in there of $88.54, bringing them down to $521,146. But remember, they have to make the payment on their HELOC because it's the cost of doing business. In order to have this money and borrow this money for this predetermined amount of time, you have to make the interest payment on it. they're going to just pay the interest payment on what the debt that they owe, not the whole 530. They're down to 521, 146. They're going to pay it off of that. We're going to take that 521, 146,000, times it by 8.5% interest rate, divided it by 12 for the number of months. The first interest payment is $36.91 that's due. Now, because that right there is something we owe, we're going to add that back into the equation. So remember, cash flow in, expenses out. $36.91. That's going to bring us up to $524,837 that they now owe on the HELOC. But month 2, we get to inject our cash flow. We're going to minus that $88.54 cash flow in, you guys. Now they're at $515,983. But we're going to owe an interest payment on that, $515. We're going to take the $515,983 times it by 8.5%, divided by 12. That's what's going to be due, $36.54. Add it back in there. We're now at $518,637 going into month 3. Cash flow in, you guys, $88.54. Now we're down to $509,783. But because we owe that, we have to pay our interest payment per month. Interest payment is $36.10. We're taking that $509,783 times by 8.5%, divided by 12, $36.10. Add that back in, $513,393. Okay, look at this in month 4. We are really making progress. If you look at this 513 to 530, they've already paid down $17,000 in actually 3 months' time. Okay, month 4, here we go. $513,393 is owed. Cash flow in of $88.54, bringing that balance down to $504,539. But we owe an interest payment on this $504,539. We're going to times it by 8.5%, divided by 12. $35.74 is now what we're paying on that. Okay, so we have to put that back in there, right? So now we're at $508,112. But we're in month 5 now. Cash flow, we got paid again. Cash flow goes in there, $88.54. And we're down to $499,258. Wow, look at that. $30,000 paid in 5 months. But we still owe the interest payment on this amount. You know what we're going to do? You already know. $499,258 times 8.5% divided by 12 equals $35.36. Okay, so now we're at $502,794 in our 6th month. Remember, we're going to do cash flow in, $88.54, and we're down to $493,940. Now, of course, they have to make their HELOC payment. I'm going to stop right there. I want you to see something. They have went from on $530,000 to $493,000. That's almost $40,000 they've actually paid down in this 6-month period. If you rinse and repeat this, they'll be done with this in about, I'll say roughly about 8 years. If you just do your math, in about 8 years, they're going to be completely debt-free, no mortgage at all. So if you look at this house, had they gone and paid the interest on this house for that whole 30 years, they'd have paid about $740,000 in interest, okay? That house would have cost them $1.2 million. Now remember, they only borrowed $530,000 from the bank, okay, you guys? But because the bank plays off of our ignorance, they're gonna charge them their house, they're gonna buy the bank's house and their house and another house starting to do that, 1.2 million. Hey, that's a house and a half. So with this velocity banking strategy, we're gonna pay this thing off in about 8 years. I didn't count the fact is that they're probably gonna get bonuses along the way. I'm working off of just solid, complete numbers now, but there's a variable up in here. They might have bonuses come up. Hey, shoot more towards that principal payment. So just so you guys will be able to see and know that you can pay off a mortgage. You have to understand you have to be disciplined to do it though. You can't just say, oh, I'm gonna go and take a HELOC out. You don't wanna overspend on a HELOC, and you wanna be really mindful with it, because remember, using it to work a strategy for you so that you can become debt free. But the banks are counting on you to say, I made my mortgage payment, now I'm gonna go and get me a brand new house. And you start that vicious cycle all over again. Even if you decide you want a new home within maybe 5 or 6 years, guess what? You're gonna have so much equity in a home because you paid this thing down. You're probably gonna profit about maybe $500,000 or $600,000 if you decide to jump out before your 8 years was all done. But if you imagine if you just sat there and you got comfortable and waited for 8 years, could you imagine going up in there? Now my guessing is that they bought this home at $530,000, but the house praised at $600,000. It's only going to keep on going up, you guys. Real estate typically, although it may go through recession periods, it typically rebounds and it kind of goes higher. That house probably going to be about worth maybe $1 million, $850,000 in the next 8 years. So if they decide to say, oh, we're done with this, we're going to move somewhere else, they're going to walk away with $850,000 in their pocket, because remember, they own this house, or they may choose to keep it. Who knows? Maybe it's going to be Airbnb, maybe it's going to be rental property. But as you can see, they now hold the leverage tool. They now hold all of the, what they call, the cards are stacked in their favor. So I would say, if you're interested in learning how I did this, how they did this philosophy, I'm a dividend friend. All my information is in those links. You can contact me. I love doing one-on-one consultations. And I can tell you right now, I can help you to pay off your debt in record time. I can show you the strategy that's going to work for you. But remember, you have to be a disciplined person. You have to make more than you spend. And you have to at least have a nice, decent credit score, maybe 650, 660. Even if you don't, contact me. I'm your dividend friend. There's free resources online. There's free resources on my website, so you can find out how to improve your credit score. Okay, you guys, until the next time, until the next video, I'm your dividend friend. I'm here until you win. This is a winning strategy. We'll see you next time. Bye-bye.